If you're a high income earner and you're considering premium financing, this video is for you. I'm Barry Brooksby. Welcome to my Wealth Optimized YouTube channel. There are some myths out there regarding premium financing. One of those is using IUL, Indexed Universal Life Insurance, for premium financing. There are some problems with IUL we're going to address today that you should be aware of. If you have an IUL policy or you're considering an IUL policy for premium financing, watch the rest of this video as we talk about some major problems, some concerns regarding IUL and its use for premium financing. Why IUL should not be used for premium financing. Most IUL policies have surrender charges. When you make a premium payment, whether it's coming from you or from the bank, in your IUL illustration, you'll notice that not all of your cash value is available in most cases, and it's because of surrender charges. The IUL illustration will have an accumulation value and it will have a cash surrender value. Oftentimes, the cash surrender value is much less than the accumulation value. You'll see IUL policies that have 10 years of surrender charges, some have 12 years of surrender charges, some have 15 years of surrender charges. What that means is you don't have access to all of your cash value, or you don't have access to a good portion of your cash value. In other words, you would be locking up money that you otherwise could be using through policy loans. IUL also has increasing costs. There are increasing insurance costs. There are also rider charges, premium expense charges, and oftentimes when you look at the IUL illustration, you'll see those costs increasing as you get older. Those increasing costs can erode your policy's cash value. If you don't make a higher premium payment, the insurance company will take those higher costs from your cash value. IUL has unrealistic returns. You might see an illustration projected at 6%, but the IUL illustration assumes that you will earn 6% every single year for the rest of your life. But the IUL is tied to an index or several stock market indexes. The stock market is volatile. There will be years that your IUL does not make money. However, the IUL illustrations don't take that into account. The IUL illustrations show unrealistic returns because it assumes you will make money every year, but that is not how the stock market works. These are only 3 problems of IUL. There are other problems as well. If you have an IUL or you're considering getting an IUL for premium financing, reconsider. Look over your illustration to see if any of these problems are found in your IUL. My recommendation for premium financing is using a properly structured whole life insurance policy. Rather than using IUL that has these problems, whole life insurance does not have surrender charges. Whole life insurance does not have increasing costs. Whole life does not have unrealistic returns. A whole life policy is guaranteed to grow money every year, and you earn an annual dividend. You don't want to find in your IUL 10, 15, 20 years from now, when you need to pay off the bank loan, that you don't have enough cash value to do so. Because a whole life policy grows money guaranteed every year, you have certainty that that money will be there. And because whole life insurance doesn't have increasing insurance cost, you don't have to worry that your cash value will be eroded. In this whole life example, I'm showing the premium of $500,000 a year going into the policy for 12 years, and then there are no more premiums going in thereafter. But you'll notice that the cash value continues to grow every year, whether a premium is being funded or not. So in year 13, we see the cash value continuing to grow because of the guarantees and also because of the dividend. This policy has a flexible premium that if you chose to fund the policy longer or shorter, you could. It can go as low as $130,000 a year, up to $500,000 a year, or any amount in between. As time goes on, you see the cash value growing larger. No more premiums are going into the policy. You can then take a policy loan to pay off the bank loan, or use the death benefit upon your passing to pay off the loan as well. We see here at the age of 85 a $34 million death benefit. We see here at the age of 90 a $41 million death benefit. And the death benefit will continue to grow as well. Whole life insurance is a fully guaranteed product that makes money every year and is not tied to the stock market. If you're considering premium financing, look at a whole life illustration so that you have more certainty and predictability. Whole life insurance does not have the problems that IUL has. To learn more and to see your own numbers, contact me here. You can watch more of my content on my YouTube channel at Wealth Optimized.